Alphabet earnings. We're ready to go. MacKenzie Sigalos has them for us. Hi, Mac.
Hey, Morgan. You've got Alphabet shares surging in the after hours, up about 1.3% now. Let me get you those top and bottom line numbers. For Q2 revenue, it's coming in at $96.4 billion. That is a beat. The analyst consensus was $93.9 billion. On the bottom line, second quarter EPS was $2.31. That's also a beat. The market was looking for $2.18. We've also got another key figure, which is cloud revenue. That landed above analyst expectations, coming in at $13.62 billion versus the $13.1 billion analyst consensus. I'm going to keep digging through these numbers, and I'll come back to you. But for now, shares actually now trending a little bit lower, down 0.5%. Back to you guys.
MacKenzie, we'll be back to you as you get more. Sarah, I want to get your reaction to that with a beat on the top and bottom lines, but the shares under a little bit of pressure. We know there had been a little bit of a rally into this name ahead of the print.
It's going to depend on the conference call and what they say about the pressure on search versus the other areas for them that are growing quite quickly, like Waymo and also YouTube and their cloud business. That's going to be what matters. The stock is not extremely expensive here, but tech stocks have rallied quite handily going into this print. And that's what we've seen with the market recently. Momentum and growth stocks had actually started to roll over before today as people had been moving more into value stocks as the economy had remained strong. So one main question is, can momentum and tech continue to lead? I think that it can. Tech right now, the Mag 7 is over 30% of the S&P market cap, but the earnings growth driven by AI should continue to deliver, including AI investments, which we should hear more about with Alphabet, which has signaled $75 billion in AI investments this year.
Yeah, I mean, speaking of these giant capex numbers from Alphabet and others, some of the biggest winners in the trading session today were these energy-related and infrastructure-related plays, whether it's GE Vernova or Baker Hughes. It came up with Baker Hughes, even some of the other HVAC-type system companies as well. Is the meaningful trade here around some of these AI infrastructure names as we start to see more and more money actually go into the ground?
Public and private interest for infrastructure has been a top pick for our Global Investment Committee for many quarters now, not only based on AI data centers, but also more building coming back to the U.S. in terms of infrastructure. I think that's a great play to offset a continued investment in the winners within technology stocks. AI is alive and well. It's a trend that's not going to go away. It's going to increase productivities for companies and their revenue levels, and we're going to need the infrastructure to build that. So that is a really nice derivative play that I think will continue for the infrastructure space around AI.